Ladies and gentlemen, today in this lesson we are going to debunk any negative belief, behavioral pattern, or thought that keeps you from being able to hold on to your winners, okay? Holding on to winning trades are one of the biggest nightmares for retail traders, and it used to be for me as well until I learned this one simple hack that gives me way more confidence when holding on to winning positions, okay? And today in this video, we're gonna break down how I use this one tool to help me hold on to my winning trades. And it doesn't just help me hold on to my winning trades, it helps me cut my losing trades, it helps me enter into positions. As a matter of fact, if I was going to get rid of every other tool that I use and only use this one tool, I truly believe I'd still be able to get in and out of the market because it is the one tool that never lies to you, okay? It's not the RSI, it's not the MACD, it's not even a critical level. It's the moving averages. Moving averages are key, and you are probably like most traders, and you're not using them as effective as you could. And by the end of this video, you are going to be able to use them the same exact way that me and my team do so that we are able to hold on to winning positions way much longer, okay? So before we go any further, I'm going to show you guys the trades that I'm talking about just to give you guys a little more understanding of the trades that we took and why holding them was so important, okay? So over here on 8/28/2025, you can see we captured this monstrosity of a long play later in the day, okay? And I believe on this trade we cleared, let me see, it was 142% ROI, okay? So 142% ROI in less than 2 hours, and I was able to hold this trade. There was no upside targets. We just blew past all-time high. I was able to hold this trade for one simple reason: my ability to identify a healthy trend by using my moving averages, okay? So that's going to be the first trade we talk about, and then the second and third trades are going to be these guys, which happened the day before, okay? You can see here, this trade I cleared 113%, and I believe on this trade I cleared something around 87%, okay? So once again, if it wasn't for these three setups this week, I probably wouldn't have been green. And that's the key that most traders miss, okay? Like in terms of consistency, you got to think about it. Your input needs to be greater than your output, okay? Which means your income needs to outweigh your losing trades, right? Your income must outweigh your output, right? Your cost must be less than your profit. In any business, if you want to be profitable, that's key. So what I'm getting at here is probably the main reason why you may or may not be profitable is because you are not holding your winning trades long enough, okay? So we've established that this is a problem, okay? Not holding winning trades is probably costing you your consistency, or at least keeping you from that break even, okay? So we need a way to be able to hold them, okay? So number one, let's break down that first trade that we seen right here. This trade was beautiful because it fell directly into my strategy, okay? I have a very simple three-step approach. I don't have time to get into it, but if you guys want more information on it and a free mini course on it, click that link below. It's that first link. Yeah, first link. I send you a complete mini course on my three-step approach, okay? So definitely check that out. But it goes something like this, all right? So the market opens up. We get a open print, right? This is a critical level, and it's a level that we must watch because the volume, look at the volume here, okay? There is way higher than normal amounts of volume at open print. So step number one is open print. Okay, step number two is going to be the moving average cross, okay? So you guys see this little green arrow that I just butchered to the upside? Well, what that's symbolizing is that the moving average, the EMA cloud, is doing something, okay? It's shifting. So this actually is very important, okay? Because based on statistical data, way more often than not, when we get a cross, we get a continuation. Okay, so that's very important. Number one, notice how we are using our moving averages. We're not using our moving averages to buy the low or sell the high. We're using the moving average to allow the market to communicate to us. Okay, this is key. Going back to breaking that negative belief in your mind telling you that you can't hold winners. One of the main reasons is because you have the wrong belief system. You have the wrong philosophy, and you are approaching the market in the wrong perspective. And we're going to debunk that, and that starts with understanding what moving averages are actually telling you. Okay, see, moving averages aren't doing anything but telling you the environment the market's in. Okay, is it a healthy environment or is it an unhealthy environment? All of this I learn, I see, I hear based off what the moving average tells me. Okay, so when I get that moving average cross, light bulb goes off and I go, all right, Josh, well, statistically, there's a higher chance that buyers are going to show up here. So regardless of what I feel, my gut, my intuition, the moving averages are telling me something here, and I want to be making decisions based off that, not my gut. So that's step number 2 is identify the cross. Step number 3 is identify the RBI or GBI. Okay, so you'll see right here we get a red candle that's ignored by the following candle. So our long entry is directly right here, and our stop loss goes directly below the candle that was ignored. Okay, so we're risking about 45 cents here, and I'm targeting this pre-market level right here, and then I'm also targeting this guy. Okay, so this is the trade in front of me. When I decided I was going to enter into the market, hedge my bets, let my money work for me, this is what the market looked like. It's very important to understand it in that perspective. Okay, I didn't need any more information. All what I needed was those 3 steps. Okay, we're in the trade. So now that we're in the trade, you guys can see this thing really starts to take off, right? And it makes sense because of this next tool I'm going to break down. And that tool is the 1 hour 9D EMA. Okay, you guys see this blue line right here? It kind of looks like a jagged staircase. Notice right here, we're below it. All right, price is below this blue line. This is the 1 hour 9 double exponential. Basically, all it is a very tight moving average. It's on price, okay? It's the double exponential. And we're below it. And as price gets above it, that becomes very bullish, okay? So before we go any further, let me whip out the 1 hour just so I can give you guys a little more context because, guys, listen, I'm telling you, once you understand this, A, you're never going to look at the market the same, but B, you're going to be able to spot way more better setups and have way more confidence while trading them, okay? Because to really break this down here, we have this critical level right here. We have end of day and previous day high. So every day, these are key levels that I'm watching. I'm just going to draw a box around it for the sake of time. So notice here, as the 1 hour opens up, we're selling off. We're getting very extended from the 1 hour moving average, okay? This is what we call extension. So I'm going to read to you guys real quick the principle behind the moving average, all right? And this is very important because, once again, we need to debunk the negative beliefs you have about price action, okay? So I'm going to go over here to my Discord. Okay, so now before you, you're going to see this is the law of moving averages. And the law of moving averages is a statistical principle that suggests that over time, the price of an asset will tend to revert back to its moving average. Ready? Filling any gaps or extensions between price and the moving average. This principle works across all time frames and is used to identify opportunity and become more aware of market behavior. Okay? It's very simple. We've all heard of it. This is a principle, okay? This is an opinion. This is a principle, like gravity. Gravity is a principle, okay? The law of polarity, that is a principle, okay? The law of cause and effect. These are mathematical, statistical, physical principles, okay, that we can rely on. They happen over time, repetitively. It's not because I want it to happen. This is how the market actually operates inherently, okay? When we get extended from a moving average, more times than not, it comes back to the moving average, okay? So that with that understanding, it makes the game a lot more different. Because when sellers show up here, right, go back to the chart on the left, notice how far we are getting here from the moving average, okay? This is very far. So now that we're far away and we're starting to snap back into it, we call it the snapback, what do you think is going to happen once we get above it? We are going to rally up, okay? And it's the same thing for the 5-minute moving average, okay? So basically, the way my mind works is as soon as I've identified a healthy trend, meaning no more gap or gap just got filled, I definitely want to hold on to that trade until the next target. All right, so I understand it's kind of complicated. We're going to dive a little bit deeper because this concept is going to change your life just like it changed mine, and same with every other trader on my Discord, okay? So we hopped in the trade. We caught a great long to the upside, okay? We didn't get our target. We trimmed as we hit 87% on SPX, right? If you're trading SPX calls, you don't always need to hold to your target because once again, often you are going to get extended from your moving average. And that's exactly what happened right here. You guys see right here, we're literally more than 40 cents away from the 9 double exponential. See, I never want to hold a position if I can't stomach the pullback to the 9 because statistically, it's going to happen more often than not. You see how we like to make decisions based off what happens more often than not versus my emotion. Oh, get me out of this trade quick because I don't want to lose money or whatever other reason most traders just sell out of the position very fast, right? No, we like to make decisions based off what we're actually looking at and what the moving averages are telling us based on if it's extended or not. It's literally that simple, and that's how we like to use them. So now, once again, with that understanding, we're going to dive into the next trade that we took later in the day. Okay, so right here, you're going to see at 1:32 p.m., I'm hopping in longs, okay? Now, once again, what am I noticing here that's actually making me get into the trend? Number one thing, okay, go back to that blue jagged line here. Price is on it. It's respecting it. We are not extended from it. Therefore, is the trend healthy or unhealthy? She's healthy, baby. That's a healthy trend. If I get clear entry criteria, I am 100% getting into the trade because I know if the 1 hour trend is not extended and it's close to price, there's a very high chance that this thing is going to rally up. And that's actually what ended up happening, okay? Once again here, we rally up. Now we're above, coming up to high of day here. And once again, that 1 hour trend is just staying high and tight. And now notice the 5-minute trend here. It's very smooth, okay? Notice the EMA cloud, okay? It's getting respected, all right? Look at this. Once again, the moving averages are speaking to us. They're telling us that the trend is healthy. And if the trend is healthy, I definitely want to participate in it. And once again, the main reason I got into this position was because we got a red candle that was ignored. The second it was ignored, boom, I get in the market long. My stop loss goes right here. Okay? So once again, that's my entry. That's the philosophy behind it. Okay? Critical level, RBI, GBI, healthy moving average behavior. Okay, no extensions. We're holding, we're on it, we're hugging it. Okay, we want to see that continuation, and we know if the trend is healthy, there is a very high chance that the trend is going to continue. Okay, so now one more trade that I just want to break down for you guys. I mean, this thing, look at this. This thing literally ended up flying. This thing rallied, and then that's what helped us get that 113%. And it was absolutely beautiful. And okay, so now let's go into the next trade that we're going to talk about that we cleared 142% ROI. So right here at 1:13 p.m., I'm hopping in the market long. All right, so let me go back to TOS so I can just give you guys a little more context on why I actually got into this position. All right, so number one thing I want to point out here is our critical levels. All right, because the critical levels give us way more context to who's actually controlling the market. And I'm just going to kind of extend that here. So on this candle, right, this is the 1:15 5-minute candle. Go back to the Discord, right? This is when we're calling out the long play at 1:13, okay? So once again, Josh, why are you getting into the market when it looks like this? Most people are shorting this. I mean, look at this, dude. You're literally coming up to pre-market high. You're below pre-market high. Sellers showed up here. They showed up here. And they definitely put, maybe this was a false breakout to the upside. This is all-time high. Josh, what are you doing going along? I'm following the trend. The healthy trend. Okay? When everybody else is assuming that the market's going to reverse, I'm staying patient. And I'm waiting for him to hop in the short play so that I can trade to the upside. I could fade the 90% of traders that are assuming the high is the high. Okay, you think it's the high because it's currently the high, but it's not going to be the high in about 15-20 minutes when the market does this. Okay, now once again, what tools can you use here to confidently get into this position? All right, look at what the 1 hour looked like. Okay, come over here to the 1 hour. This thing's healthy. We're not extended from it. I mean, we're actually, ready guys? Right here, we're actually closing. Hold on. Right here, we closed below the 1 hour. And just like the day before, now we are closing above the 1 hour. This candle right here was insanely bullish. Insane. So now go back to the chart on the left here. When we're actually hopping into the market right here, why are we getting into the market? We're bouncing off previous day high for one. We're bouncing off the 1 hour trend for two. For three, we're respecting the 20 EMA. And then the best part about this, guys, is right here. I'm going to draw it in red. We have a red candle that was ignored, meaning the high of the red candle was disrespected by the next candle. That's where we hopped right into the market long. Our first target was high of day, and then we just continued to take this all the way up. So once again, if we want to get different results, look at this, dude. This was beautiful. This was literally beautiful. And the reason why I'm so proud of this trade is because I know what the old Josh would have done. And maybe it's what you're doing right now. You're trying to guess the high. You're trying to guess the low. It's not working. It's not working for you. And the sooner you can realize that, the sooner you can actually start making good money in this game, okay? We need to stop trying to guess the high. Yes, I understand that sellers showed up here and it looks a little scary, right? This is a lot of red, Josh. I don't know. I'm going to hold off. Well, while you're holding off, I'm going to be playing long because we are bouncing off the 1 hour trend. And I know a lot of people are going to be going short here, so there's going to be a lot of upside potential here, okay? And it's off all-time high. It was the all-time fake out, okay? And now look at, I mean, guys, it's clear as day. I know hindsight's 20/20, but this is the only information that you need, right? Like everyone's like, oh, yeah, of course, I should have done that. Well, the reason why you didn't is because you weren't looking at the proper information when it was in front of you. Okay? This is all the information you need. We're bouncing off the 1 hour trend. We have a clear red candle that was ignored. That's our long play. Our stop loss goes right here. Okay? And now we're targeting high of day. Bam. And then I just continue to update my team. You guys see here, here's me just trailing my stop. I'm trading in one SPX contract right here. And then guys, look at right here. What do we get? Another red candle to be ignored. Okay, that's another beautiful entry. You could have re-entered in right here, put your stop right here, called it a day. Okay, and you can see, look, we come back into the green bar that was ignored, all right, or the red bar that was ignored. This box is called the area of value. I just made a mini course on that. It's a phenomenal topic. And look at what happens, guys. I mean, seriously. Like, I don't make this up. This is how the market moves. Red candle gets ignored. You draw a box around it, and you do not stop out until it breaks. It's just market structure. It's just market structure. This thing continued to rip. It was a beautiful trade. Like I said, we ended up clearing, what was it, 142%. That was 113. This one, 142. At the end of the day, guys, if you're not able to hold on to your winning positions, it's because you are unaware of what the 1 hour trend looks like or if it's healthy or unhealthy. I highly recommend that you learn the moving average principle that we stated in this video. Go back, rewatch it, write it down, okay? Anytime you are extended from your moving average, get ready for the pullback into it. And anytime it's healthy and it's relatively close, get ready for a continuation. I love you guys. I appreciate all your support. Make sure you like, send this to somebody that needs it, and I will see you in the next lesson.